We're hearing directly from customers and many households in the community who are really feeling the pressure of higher rates. But what you'll see is, at least at the moment, the proportion of customers that are currently unable to make their loan repayments is still at very low levels, well below COVID. We do anticipate that that's going to increase over the course of the year, but we're certainly in a very strong position to be able to support customers. We've reached out to them proactively to make sure they're aware of all of the assistance that is available. And look, this is the time in the cycle for the Commonwealth Bank to support our customers through that.
You've estimated 0.9% of your variable borrowers with negative cash flow are a residual risk. Roughly how many households is that? Is it tens of thousands?
Well, one of the ways to think about it, though, is it's very much sort of modelling. So if you work out, we've got a customer base of, we serve about 13 million Australians, we've got just under 2 million home loans. But what we're trying to model there in particular is we're making assumptions on, from a customer when they first originated a loan, adding basically an index to how much we think their income or expenditure has changed. And so it gives you a sense of what the total number of customers may be, but what's actually most important is the customers that we're dealing with on a case-by-case basis. And so, to that end, we've recently spoken with 100,000 of our customers that we thought would be in the most challenging financial situation. What we're able to see is that they're taking practical steps. We're making sure they understand the support that's available for them, and we don't envisage that that's going to deteriorate very rapidly, but certainly it will get worse over the course of the year.
How many do you estimate are in that residual column?
Well, again, it's hard based on just the modelling, but if you imagine, it's certainly going to be in the thousands. But if I thought more broadly across the Australian economy, that's obviously very low levels. It is going to depend on a number of important factors like unemployment. I mean, one of the reasons why the Australian economy is being so resilient is just because we're at record low levels of unemployment. We've never had more Australians in a job, and that's obviously really helping people support and get through more challenging economic times.
What about those borrowers coming off a low fixed rate mortgages onto variable rates? Have you stress tested them, and how do you expect they will cope?
Yes, we certainly have, and look, we're seeing that each month. To give you a sense, there was about $10 billion of customers that had a fixed rate that matured in the month of June. And what we've seen from customers that are coming off fixed rates is they're able to make their repayments basically in line with the rest of the portfolio. If you have a fixed rate, and we're proactively reaching out to those customers, of course there's time then to prepare for that, and we're seeing people take practical actions to be able to manage that fixed rate maturity.
At this point, you say borrowers have only felt about 2/3 of the RBA's cash rate increases, and most have only about a year's savings buffers or less. What happens if the Reserve Bank doesn't start cutting interest rates sometime next year?
Well, I think clearly it's going to be dependent on a lot of things. We believe we're at the top of the rate hiking cycle, at least for the foreseeable future, but it's going to depend on how quickly inflation does come down, particularly services inflation, towards that target band. The RBA has already shown that they're prepared to be patient for that to come down. We anticipate rates will begin being cut in calendar year 2024. Exactly which month is, of course, very contentious. And so we would anticipate that there will continue to be pressure on households during that time. But based on what we've seen now, we're very optimistic that our customers will be able to navigate through that.
Are your loan books going to start looking pretty ugly if the RBA hikes beyond your current forecast, or if the cash rate remains where it is into 2025?
Well, as I said, in terms of a lot of the indicators of our loan books, they're at very low levels relative to any prior period. So we would anticipate that they will deteriorate over the course of the year. That's absolutely to be expected. Of course, at an individual level, that's really important. We work very closely with each of those customers, and certainly we have significant capacity to be able to support customers through more challenging economic times.
What have you learned about how unevenly the current round of monetary tightening is hitting different sections of the community?
Yeah, of course, as we think about higher rates, they impact our customers very differently. If we think about the period that we've just come out of, where we've had record low cash rates, we've had millions of our customers who are more dependent on deposit or savings income receiving very low rates. clearly their interest income has grown quite substantially over the course of the last year. Whereas borrowers on the other side, which are smaller in number, but of course most commonly borrowing for a home, they've seen a rapid increase in their repayments. And so there is the transmission effect through the broader economy as rates have risen.
And so is Australia going to have to grapple with inequality along generational lines?
Well, I think inequality is a really important issue, and it's certainly something that is present in Australia. Fortunately, nothing like the extent that we might see in some international markets, particularly like the US. I think that's an important topic. I also think housing affordability and availability is a really important topic. I think everybody realises the supply and demand of housing, the importance of that. I mean, one of the benefits to the Australian economy at the moment is the increase in migration. That's a real positive. Of course, I think everybody has a right to be able to have access to affordable housing. I know that's something the federal government is very focused on. We are too, and so there's really important social and community issues that we contribute to, that we lend and support our customers to be able to achieve those goals.
Given the RBA is forecasting an unemployment rate of 4.5%, which would see tens of thousands of people lose their jobs, what further impact is that going to have on households and on the bank's ability to continue to deliver for shareholders?
I mean, one of the real strengths of the economy to date has been the labour market. I mean, unemployment rate remains at 50-year lows. We've never had more people working. And so some softening in the labour market is likely, as you said. Clearly that puts pressure on individual households. But at those levels, they're still, by any historical measure, very low. But of course, that is very challenging for any individual in that set of circumstances. And it's very difficult to repay your loan if you're not in a job. That's clearly a very important indicator or leading indicator of a customer that's likely to be unable to make their repayments and go into default.
Is there something that you would like to say to someone who is in that situation right now? What is your message to a borrower who might be wondering whether they can make their repayments?
I mean, the most important thing, of course, is to talk to us. I have the opportunity to sit in our contact centre and hear when we're talking to customers, either outbound or inbound, understanding their financial circumstances. And often the case is that our customer would be saying, "I didn't realise I could ask for that help." There might be all sorts of different options that may be available. If you're ahead on your repayments, you might be able to move into an interest-only period. There's definitely support that's available, and it's definitely much easier to work through those problems with us directly versus waiting until you're already behind. But we've, of course, taken a lot of steps. We've written out to all of our customers. We're regularly in contact with customers that we anticipate will be in financial difficulty, and working through those problems together as best we can is really important.
Now, finally, while we've got you, CBA is a big sponsor of the Matildas, so I'm going to ask you for a forecast. Can they go all the way?
I certainly hope so. I think it's our best sponsorship in the history of the Commonwealth Bank. It's been an absolute thrill to see how well they've played. They're doing the country incredibly proud, and obviously looking forward to the game on the weekend. They've done brilliantly to get this far. If they could go all the way, we couldn't be happier.
Matt Comyn, thank you.
Thanks very much.